Are you like millions of Americans right now, worried that the housing market might be heading for a crash? Stick with me and let's talk about it. My name's RAnderson of Lamakia Realty. Welcome back. Ali Wolf, Director of Economic Research at the research firm Myers Research, was recently quoted in an article saying that people have PTSD from the last time the market crashed in 2008. They're worried about buying at the right time. And guys, I got to tell you, we're not in the same situation that we were in 2008. So first things first, mortgages, the standards today are much better than what they were back then. During the housing bubble, it was not difficult at all to get a mortgage. You could pretty much go to any bank, any mortgage broker, and get a mortgage whether or not you even had income. So it caused this inflated liability basically on these mortgage companies that eventually they just couldn't back anymore. And that was one of the biggest contributing factors. Plus, back then we were also seeing a price surge. So the annual home price appreciation was just skyrocketing. And the faster it goes up, the faster it comes back down. And that's part of the reason why we saw the bubble burst in the way that we did. So when you compare the 6 years leading up to 2008 with the previous 6 years, so going back to 2014, you can see that the median price and normal appreciation was hovering around 3.6%. So between 2000 and 2008, appreciation was actually much higher than that. And that's what was part of what contributed to the housing market bubble before it burst. We don't have a surplus of homes on the market right now. Right now, it is very much a seller's market, meaning that there are a lot of buyers and not a lot of sellers. So there is an increased demand on the buyer side, but the seller side isn't keeping up. So that's why back then there was a surplus of houses and not a surplus of buyers. So it's an opposite situation. So we have more people trying to sell their homes and not enough people trying to buy them. And when you have people that aren't trying to buy other people's homes and people need to sell them for one reason or another, that could be any reason from foreclosure, their debt's too far extended and they need to get rid of the house in order to avoid foreclosure or bankruptcy. Like, those are some of what contributed to the 2008 housing market crash. Another thing is has a lot to do with what's called cash out refis. So when housing prices soar, people tend to refinance their home in order to get cash out, to make improvements, to pay down debt, consolidate credit cards. Like, there's a whole bunch of different reasons why somebody would want to take cash out of the equity of their home. If you compare the numbers, and I'll show you guys on the screen here in just a minute, but the total equity cashed out in 2007 was $240 billion nationwide. So that's a lot of money compared to now, or at least in 2019. I'm looking at the numbers on my computer right here. I'll put them up on the screen for you guys. It is 748 billion, or excuse me, 74 billion. So in 2007, we had a ton of people that were equity poor, basically. So what it means when you're equity poor, it means that you've taken the cash out of the equity in your home. So the market value, you have what you owe on your mortgage, and then you have your market value. That space in between, that's your equity. That's your the value of your ownership, basically. And in 2007, homeowners across the country tapped up to $240 billion of their equity. Whereas in 2019, they only took out $74 billion in equity. So that's, for those of you who are numbers people, that's a big difference, right? So that's a dramatic decrease. And that's why people are not totally cashed out on their mortgages. So bottom line is, nobody has a crystal ball, right? There's a lot of things going on in the world right now that can make things go in a lot of different directions. But if you're personally worried about where the housing market is going, you're the one that needs to make the decisions on that and to find out what you are or are not comfortable with as far as taking a risk. Whereas at the end of the day, you just got to look at the numbers, and the numbers just don't prove it. You know, what we're seeing right now is a housing market slowdown. So we're seeing the speed of transactions slow down. But if you look at my video from last week I talked about everything that's going on in the world with coronavirus. If you found this video helpful, be sure to like my video down below, subscribe to my channel, and pay attention every Thursday for the next video to drop to help you buy a home.